of us. Why aren't you on the intro?
Step one, wake up early, gonna rise with the sun. Step two, eat some good, some food in you. Step three, you grow hard about what you wanna be. Step four, everybody just do your thing.
Wake up, today's gonna be a good day. 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 Wake up, today's gonna be a good day.
Hey,
Good morning. Welcome
good morning.
Welcome to Good Morning Crypto, where we turn the early hours into your edge in the financial world.
Excellent.
Today,
That it? That's all you got?
today we're going to talk a little bit about Morgan Stanley and their ETFs.
Morgan
So,
Stanley and their ETFs, huh? What about them?
Well, they just got approval to recommend with their advisors the Bitcoin ETFs, which is a giant change in their setup. Whereas in before, they'd have to end up coming and having people ask them about the ETF. They can now recommend it as, say, a 1% allocation in your portfolios.
So it's streaming to your channel,
And to
but
yours.
and to mine?
Yeah.
It is. I don't know what to do about that. That's funny.
I'll have to look into it, honestly.
And it's okay. BC Port Corp is live.
Yeah. And so is
So
Laguna
anyways.
Beaches.
Good morning, crypto. All right, hey guys, welcome to the new show. I like to talk a lot, so I had to stop doing that so much. So I had to bring on Blackie Chan, so to give me some different views. Also, you know me, I don't like to wake up in the morning on a lot of days. So it was a good, awesome idea by Piper to basically add Blackie Chan to the show, but also not really an addition. It's more of a coming together of a new show, new concept. Yeah, I'm just gonna be doing a more what would you say? More macro analysis, more midterm macro, less of the like short term scalp stuff. Basically, I mean, I'll try to give setups for the day, but it's going to be a little more of a hey, more information driven than anything. I think is kind of going to be more of what we're looking for on this show. Just more information because we know that at Piper Academy, knowledge is profit. So the more you know, the better you can do in these markets. And, you know, we don't want to make quick snap judgments because sometimes that can get us into a lot of trouble. So, you know, we just want to do what we can to give you the information that you need, not financial advice, to make the best decisions that you possibly can for yourself, you and your portfolio. So, Blackie Chan.
I know that we had talked more about also adding in some news elements so that people can hear what's going on before the markets even open so they can kind of gauge themselves for where the markets might move. And also talk about heavy data drops that might be coming that day, or maybe some less heavy ones that could have some impacts on the market. Because I know people like to pay attention to the big ones, but sometimes when you pay attention to those smaller data drops, you get information that's going to be used in those bigger data drops. So it's always nice to hear those things before you start your day so that you know what you're looking for. and then you can kind of gauge that on a 1 hour chart or a 4 hour chart, and you can kind of see where things are going over the next day or two, and so you know what direction to trade in, because it's never a good idea to try to be like, well, I know the top's here, so we're gonna short here, and then you get stuck in that, and it's going against you when the trend is clearly the opposite direction.
Yeah, you've got to be able to adapt to the situation that is presenting itself. You've got to be able to hit that reverse button when needed. Don't get stuck. Basically stuck holding on to hope that a trade is going to turn back in your direction. Cut losses early and let winners ride. I think that is something that we will preach on this show.
Most definitely. That is a big part of my trading rules. So I will definitely be saying that a lot. You can't get emotionally tied to your trade, because that trade might go against you very quick. And if you're like, yeah, it'll turn around. Yeah, it might be 3 days before that thing turns around, and you just missed out on 4 trades because you waited.
Yep.
And plus, you gotta pay to keep that trade open. No one wants to do that.
No one wants to do that.
Josh just said XRP.
Yeah, exactly.
Or ADA.
So, what do you think about the markets in general right now?
Honestly, I'm kind of looking for a beginning of the week, Monday, Tuesday pump. Probably nothing extreme, just like some positive movement. And then, honestly, I'm short-term bearish. So I'd be looking for shorts after that, especially with FOMC data minutes coming out on Wednesday, and Chair Pow Pow, as Alex likes to say, speaking right after that. And
Chirpow.
yeah, yep.
Do you have a screen that's both of us and a news? Yeah, you do.
Yep.
But does it only share your screen, or does it share my screen too?
This one's just mine. So
Okay.
I can set one up for both of us and your screen share.
That's fine. You got you want to get into that article?
This article. Yeah. This is something that just came out this morning. It's about Morgan Stanley, which is the holders for all of the ETFs Bitcoin. So the same way that we self-custody Bitcoin, Morgan Stanley is the people that are self-custodying all the Bitcoin for all the ETFs. And so they just got permission to be allowed to tell people who are already invested with them about investing in Bitcoin ETFs, which opens up a lot of new money coming into the space. Because before, it was only, hey, I heard about this new Bitcoin ETF. I think I would like to make an allocation.
Mm-hmm. What do you think about Bitcoin ETFs? Are they good or bad for Bitcoin?
Well, I think it goes both ways. I think it goes both ways. It is a double-edged sword for sure, because the whole point of Bitcoin was to be the owner and controller of your own money with a process of decentralization. Whereas yes, you get exposure to Bitcoin with an ETF, but you don't own that. You don't have control over it. If they wanted to do something with your Bitcoin, what's to stop them besides laws that, they totally, all of the banks follow all of the laws that they're supposed to follow. And that leads to awesomeness, and we've never had problems with that before.
Banks should regulate themselves, if you ask me.
Oh, yeah. I mean, that's how it's set up now. It's working awesome. Oh, like,
Yeah. Yeah, well, with the ETFs, we do get more adoption, and that is good, generally speaking. But, you are also getting the banks involved, and you are getting BlackRock owning, a large portion of Bitcoin. So, um, yeah, I don't know. The good thing is that people still sell it, so you can still buy it and hold on to it. So, so as long as people are still selling it, hey. Uh, but we have net inflows still on BlackRock's ETFs.
yes. Let me actually pull that up because I've got a little resource. If I go to it, um, where is it? Is it this one? No,
We gotta
that's
have this
news.
stuff ready to go, prepped and ready to go.
There it is. Bitcoin ETFs.
Hmm.
So this shows you all the outflows and inflows into the ETFs, um, along with distribution of who owns the most and who's selling off the most, who's got the biggest inflows, and it's a pretty useful tool. Minded that you're seeing the data for the day before, because with the way that the ETFs are set up, if anyone decides that they're going to buy Bitcoin that day, it might have been in their account for that day and they'll get the gains of that day, but the Bitcoin itself is not purchased until market close, which is 4 o'clock Eastern time. So that's when you'll start seeing the movements on blockchain analysis.
What up, Ti Joe? He said, "What's up, guys? Audio is good and video is also good. Excellent.
Awesome. That's what we like to hear.
Appreciate that, man. Yeah, we're trying to get. This is just a test stream, so uh, I know it says Good Morning Crypto on it, but on your channel it says test. On mine it says Good Morning Crypto. So I don't know which one is it.
It's
But yeah,
testing Good Morning Crypto.
yeah, we're testing Good Morning Crypto. So yeah, so yeah, lots of inflows. We're still getting lots of money into Bitcoin. That is still, I mean, in my opinion, it's still bullish. You want to go ahead and go over to my chart real quick
Yeah,
right now, real quick right now.
there it is.
All right, so looking at Bitcoin on the weekly chart. Now, this purple line that I have right here, this is a 10 weekly simple moving average SMA. So essentially, this is just, above it, we are considered to be bullish. Below it, we are considered to be bearish. So right now, we are trying to get back above it. We have been sitting below it and kind of playing with it for the past 5 months or so. So just, I really would like to see us make a nice significant push above it and get a close above it and continue putting closes above that 10-week EMA. It is currently sitting at about $62,344. So it would be nice to see us get a close above that. I don't know that we'll get that today, but maybe next week we can start putting in some closes above that level, especially when we come back down here down to the daily. We can see that we did fall through that 10-week SMA, fell straight down to that macro golden pocket. I can hear all of your clicks, Blacky Chan. I don't know what you're doing over there, but I can hear all of it. um, so yeah, so this is just a macro golden pocket pulled from the all-time high, the old all-time high, to the bear market low, and then so we've got the break above the old all-time high, and ever since we have been sitting down, or we have been playing around below that level, and we did get a back test down to that golden pocket. Big engulf or not engulfing, big buying wick coming in there. So this is just showing that buyers really stepped in once we dipped below that $50,000 level, $50,000 level. Buyers stepped in, pushed price up pretty aggressively, and we are currently just working out that lower price boundary. So if I move back down to the 4 hour, we can see that we are creating a little bit of a bull pennant here, 4 hour bull pennant. Go ahead, put that on screen. And if I take a measured move and I pull from this high down to this low and place it on a potential breakout area right about here, the measured move gets us into new all-time highs and gets us up to about $78,000. That what we want to see on that is we want to see price break above and then get a pullback and retest that level and then continue higher. So the first thing before we can even consider this as a possibility is we need to see price break above this downward sloping resistance right here. Break above that. I would really like to see us break above this high over here. That gets us above 61,800. Let's just call it 62,000. Like to get above 62,000. That is my next level. 62 to 63 is essentially the level that we really want to get above and start closing some daily, if not at least 4 hour candles above to kind of give us life, get a break above that downward sloping resistance, get a back test, confirm for support, and then continue to the so that is what I want to see coming into this week. I want to see that bullish break and a back test and for price to hold this level here. So hold 60K is essentially it. Break above, hold 60K. I know it said 62. We do want to get above that, but $60,000 is the one that we really are wanting to hold, break above and hold going into this week and the following week as well. But I think we are closer in proximity for it to happen this week. We have had a couple of bounces. So coming up here and getting another push down would not be unsurprising to me to come down and clear this low here. But it is not necessary either. Either way, we want to see a break above that high or below this this support, that resistance or this support. If we get a break below and we get a back test like this, then we could be looking for shorts. Now, right now, I am still maintaining bearish sentiment because we are still above this $38,000 level here, this last major swing level. And this is our high here. So we're just kind of stuck within this range, really. We've got this 3-month fair value gap that we tapped into as well and pushed straight off of the midpoint of that 3-month fair value gap. So everything is just, I mean, everything is looking how it's supposed to look. We're just still in this corrective phase and we just have to break out of it. And I don't know if, when, or if that is going to happen. All it can only give you, if this, then we do this type of sentiment, type of, setup situations. So I just want to see the break of that high there. Or if we are going to go down lower, break down below that support, back test it, and then move down lower. But who wants to see that? We don't want to see that. We want bullish price action. And maybe we'll get it. I'm going to bring up the RSI real quick and RSI primed. We are sitting below on the daily, so still sitting below that 50 line, showing that we still aren't technically in seeing bullish momentum on the daily. But if we go down to the 4 hour, you can see we are creeping back above that 50% level on the RSI, on both the RSI primed and the standard RSI. Now we are getting a little bit into the heated part here. So if we push this even higher, if we come up here, then we start looking left and start saying, all right, if this starts moving up, well, what do we have? We have a high, and then we have a higher high on our oscillator, on our RSI high, and then a higher high on both RSIs and on our price. This is what we want to see because this is showing us that price is following the momentum instead of diverting against it. So if price is following momentum or momentum is following price, then that's what we want to see. What we don't want to see is this come up, break this high here, and then come up short of this high here, because then that could set up a bearish divergence. We don't want to see that. But I don't really see too much. I really don't see a bearish divergence forming here because these are based off of these candle closes. So really, it would be this high here. So if we break above that and this breaks above this high here, then momentum is just following price and everything is good. So that's basically it for Bitcoin. For me, just get above this this downward sloping resistance, hold it for support, and then let's see a nice continuation push off of that for the bulls. But that's going to be it for me for this segment. Throw it back to you, Blackie. BC Port Corp. That's what I got. That's what we got to call you. BC Port Corp. I know that was a little long-winded. I can't hear you. Are you talking?
No, I was not yet.
Okay.
No, it's funny that you said the 60K level.
Yep.
Because if you pull a fib from bear market low and you go to all-time high, that 60K level, looking at 60.3, is the 236 on a retracement. And if we would like to continue some upward momentum, we really need to reclaim that level because we've been battling with it a lot. We've got some decent bounces off of it here, a little wick below it here, and then you saw as soon as we kind of consolidated on it, got a push off and couldn't continue with the push, we ended up immediately losing it, and losing it very hard, before trying to make another reclaim of it to push into price discovery. And again, we stayed in range, immediately lost it, tried to push back up above it, couldn't do it, and now we're sitting here below it. If you pull up an hourly chart, we do have a fair value gap sitting at the bottom of the range, and that's right on that 236, the 386, and it's right down here. We've got the 386 running through there with a fair value gap. So if we can't reclaim this and continue to the upside, I would look at that being closed. Other than that, I don't really have a lot for the week. You pretty much touched on the rest of everything.
Yeah. I do have Ethereum up. That doesn't look right. I'm sitting there scratching my belly, and it does not look right on the video. But anyway. All right. So yeah, Ethereum. I honestly have not looked at this at all. So let's go ahead and zoom out real quick. I say at all, but I mean I've obviously looked at it. Just one thing that I did want to note, just right off the bat here, is you can see that what ETH has done is it broke out, it had a little bit of consolidation right here, right? And then it broke out even further, but this big push down came right back down to that breakout level. So in my opinion, ETH is looking kind of weak compared to Bitcoin. It could take a little longer than Bitcoin to get ramped back up because it is going through its own whole like ETF process, sell off process, just like Bitcoin went through. So what I'll be looking for on here is this is on the weekly chart, um, but I'll be looking for a little more downside on Ethereum so that we can bring down our oscillators on our RSI. That way, we can start to form a little bit of a bullish divergence here with our oscillators putting in lower lows and our price putting in higher lows. That would give us a bullish divergence on the weekly chart. So if we get that bullish divergence on the weekly, then we could expect, you know, significant price action to the upside. Our previously we did have a bullish divergence here on our RSI prime at least, but not on the standard RSI. So hey, points for RSI prime. Now I do love the divergent signals that it gives on your standard RSI. That's why I use it, and just to see general momentum. But the RSI Prime does a really good job at just really showing where the volume and the price are uh, relative to the strength of the market. But anyways, you can see that we did get a nice big push off of that previous bull div. So I would like to see another bull div. Now this could be flat too down here on this RSI primed and your standard RSI. This can be flat too. It doesn't have to put in a lower low necessarily. Same with the your standard RSI. It just has to put in. It can be flat and it just has to be divergent from the price action. So a flat just means that momentum is actually holding as price is coming down. So that is showing that the momentum is holding and it's not weakening as it is coming down. So I mean, there's a couple of ways to look at that, but even if the momentum was coming down, price would still be holding, right? So it's not the momentum. Sorry, it's not the momentum that is holding. It is the price that is holding, even though the momentum is coming down. That just shows strength in the price at that level. The fact that even though the momentum is down, but price is holding up, hey, that is showing buyers are still holding price up, and there's good demand in that level. Now, it did put in a nice big wick on the weekly, so that is something that we could consider. But if Bitcoin does get a little bit of a move up or breaks out of that bull pennant, then maybe we could see Ethereum come up a little bit too, but also get a pullback. Now, we can go down to the smaller time frames. Let's go down to the daily and see what we're looking at on that. So just right off the bat, I can see that this is going to be an area of resistance as it was support previously for multiple touches. So 2848, 2850, probably around 2800 to 2850. That is going to be a price point to look out for if it comes and breaks above it. But then fails to close above it, then I would just expect more consolidation, more sideways, and maybe even a little more downside. Maybe even to come down and sweep these lows. Come down to the 4-hour. We can see that resistance sitting right above us. We do have this last little consolidation range on the 4-hour before it fell apart. So that is going to be a zone that I'll be looking for Ethereum to tap into right above, right between 28, we'll say 28.5 and 29.3, $29,030, that is. So if we are to get a break up, I'll be looking for bearish divergences. Doesn't look like we might even put one in. But we do have some relatively equal lows right here. So I would definitely watch out for that. These equal lows, relatively equal lows, they like to be swept before moves back to the upside. Now we did come up short, so that could show strength, and that means that we may not necessarily have to come back down and sweep these lows. It is just somewhere that I would definitely be watching for us to get into, as there is likely to be some buy side liquidity down here, meaning you have buyers, or rather their stop losses sitting below these two lows right here and here. Because that's where most people would place their stops if they were in a long trade. Then you would have low stop losses here and stop losses down here at this low as well. So that is where the liquidity is going to be residing. Now, if we do have some shorts in the market, then their stops are going to be resting here and above here. So that's basically it. Get above 2,800, 2,850, close above that. That is what we would want to see. We could see it come up to right to that zone and do some consolidation before it breaks. Just want to be watching that level essentially, and then we'll have to wait and see. I need more price action to develop for me to feel comfortable going one way or the other for Ethereum. It's not as strong as Bitcoin, especially after that big push down. So I could definitely see some more sideways consolidation for Ethereum. But yeah, get above 2,850, close above that, start consolidating above that, and I think it will be good. So just wait and see. Just wait for price action to develop, and that's what I'm looking at for Ethereum. Yeah, I mean it'll follow Bitcoin, but I think everything else will lag behind Bitcoin as Bitcoin makes its ascension to 100K. Boom.
Well, that's some nice TA there. Sorry about that. I had something stuck in my throat. But I know you talked about some downside on Ethereum. If we cannot capture this 386, which is a fib extension pulled from the low here to the high to the low there, I would look at closing the fair value gap that we're pretty much just sitting on top of, and that starts at 250 and that, or 2,500, and then ends at 2,400, and that's kind of what I'm looking at on Ethereum. If we do end up getting some downside on Bitcoin, I would not be surprised to see us take out these lows and make a little play on the 236, and that's sitting at 2020.
Oh, that's it? Okay.
Yeah. Mine's just nice and short. You go so in depth that I just need to bring up a few price points that I'm looking at, and that's about it.
So maybe you am I blurry?
Not
So
to me.
maybe you need to do your TA first, and then I can swoop in and go in more. Whatever works.
That would definitely. I mean, honestly, it works either way. Um, there's certain things that I go more in depth on. I don't look at Ethereum like at all.
I
Like,
mean, I honestly really don't look at Ethereum that often either, but uh, it is the second largest crypto, so I think it is something that we should definitely start spending some time on. It is the only other crypto with a spot ETF on U.S. exchanges, so I mean, it's got almost a $500 million market cap. It's the number one proof of stake chain, so and I'm pretty sure it's got a pretty big backing with J.P. Morgan. Uh,
Oh yeah,
so yeah, I'm
and
pretty sure
BlackRock.
they invested. I'm pretty sure J.P. Morgan invested, or was it Goldman Sachs? Might be Goldman Sachs. One of them. Which one's Jamie Dimon?
I believe that's Morgan Stanley.
Okay, so one of them, either one of the biggest banks in the country helped fund the creation of MetaMask. So I'm just saying.
Oh yeah. The only reason I don't look at it as much as I probably should is I don't trade it. The only thing I trade is Bitcoin because I've got so much time horizon on it that I can do all the all the back testing and get a good analysis using like math equations and stuff like that. Whereas
Yeah,
then like Ethereum is I don't know if people looked at it. It's kind of an ugly chart sometimes. We're like,
it
we're
is.
getting it, and then lose it, and then you just don't know really how well it's gonna do.
Yeah, I don't trade Ethereum because I absolutely despise its price action. Um, so it has some of the nastiest price action out there. So I don't really trade it. I honestly, I almost exclusively trade Bitcoin. I mean, I have my portfolio. I have stuff that I make moves on a more, macro time scale, on a larger time scale. But outside of that, I mean, I when it comes to day trading, I almost exclusively just day trade Bitcoin. I mean, it's the easiest. It has the biggest market cap. Um, Institutions are involved, so I know their price action or how they like to do things. So it's just so much easier to trade Bitcoin on a daily than it is anything else. I mean, I know people that are successful and do well trading altcoins and all that stuff, but hey, power to them. You know, I don't. With you know, you're a working man like myself, right?
Yep.
We both got blue collar jobs. We both work full time. We don't have all day to just stare at the charts, and and I think our show can help benefit people just like us in our situations, where it's just, kind of give more of a broader look, kind of give more of a macro or, probably not going lower than a 4 hour time frame on altcoins, right? Maybe 15-minute for entries, possible entries. But outside of that, I mean, really, I just want to help people personally, I just want to help people build their portfolios, but by looking at charts, not. I mean, news is cool. A lot of stuff in crypto is hype driven, um, but we will be looking at the top 30 coins on a weekly basis. I think that is a goal of ours, is to do 5 a day. With that being the first 5, so we'll do Bitcoin. I don't think we'll do Ethereum every day, but we'll do Bitcoin definitely every single day. Then after that is going to be the remainder of the top 5 on Mondays, and then we'll do 6 through 10 on Tuesdays, 11 through 15 on Wednesdays, so on and so forth. And we'll exchange the top 30, whatever the top 30 is at the beginning of the week. This is going to be on my end, but whatever the top 30 is at the beginning of the week is going to be the top 30 for that week, meaning if there is a change in the top 30 at all, it won't be represented until the following week, if it is still there at the end of that week, or at the beginning of the next week. So whatever it is at 7 p.m., whatever it is at open on Monday, at Sunday evening, really, for us, whatever the open is there, then I'll go and I'll look at the top 30. Usually there probably won't be much movement other than between like 25 and 30, unless something has exploded in value. Um, but the goal is really just to kind of, the purpose of that really is to kind of just focus on the bigger projects in crypto because they are also that also makes them the least risky. Crypto in itself is inherently risky, no matter what you get. So you're going to have risk and volatility. But I kind of just want to focus more on bigger, more popular, the most popular projects, the ones that get the most attention. We will do viewer requests as well, but that is just kind of going to be like in our daily routine. I will try to shorten up what I need to, but yeah, we've got a whole outline that we did not stick to for our test. So I didn't have it up on the screen. You have it up on the screen, but I don't have it up on the screen. So, but we'll, you know, it's all going to be a learning curve for us. So we do appreciate everybody joining us in the chat. We're going to do our best to serve you the best that we can. And yeah, just wanted to get into a little bit of what we're going to be doing, what we're about, and yeah, not a whole lot of risk on this channel. More education, less risky stuff, or on this show anyway. And yeah, but my swims, I still plan on doing those on Sundays on my channel. Uh-oh, my light just went out. My light just died. There we go. We've been on for too long. No, not really. I think it charges up, so it has like a little battery source. So maybe I need to plug that up. So you can go ahead and do some talking.
Well, I noticed that Rockinos said that the NASDAQ sounds cool, if we don't mind. And
I think that's going to be part of our daily, or we didn't put that in our daily, but we probably should.
We didn't put it in the daily on the outline. I do have it. So I have my whole crypto section on my trading view. And then I have a whole nother folder that has things like the Dow Jones and the SPX and the Dixie and NASDAQ and gold and copper and things like that, which are very useful as a market indicator. So I don't want to be like, I am a crypto guy. I've been into Bitcoin since 2011, but if you ignore the other side of the markets, then you'll miss out on a lot, because those indices and metals and things like crude oil are very good indicators, along with data drops on how the market is actually doing. So you have things like the Dow Jones, which will give you like, how is the industrial side doing? Where say you're not going to get a manufacturing print that week. Well, you can look at the Dow Jones. You can tell how that sector is doing for the week. You can look at the SPX and kind of know how the tech sector is doing, because that has a lot of tech heavy and some defense stocks in it. Looking at the Dixie is always informational, because you can see how the dollar's doing against other currencies. Things like this will also be a big part of the channel, because a lot of the times you see these crypto channels completely negate the fact that there's a whole nother market that is the driving force of the economy. And crypto is invested by about 7% of the population. And that's super tiny.
Yeah. That's only going to increase with people putting Bitcoin in their 401ks.
Most definitely. And that's what we've been waiting for. But, I mean, still 7% is going to be greatly affected by 93%. And if you're like, I see all the time, I'm big on Reddit and Twitter, and you'll see these crypto groups, and they're like, why is it dumping? And I'm like, did you look at the SPX? Did you look at Dow Jones? Did you look at the Dixie today? I was like, it's not that weird that it's dumping.
So speaking of the SPX, I got the SPX here up on the weekly, um, and it's put in a nice hefty divergence on the RSI on the weekly chart. So that is a little concerning. Now we are above the 10-week SMA, so that's good. We did close above it last week, and this can still expand higher, even though we have this bearish divergence. But even if it does expand higher, look at this. We can see that our momentum might be coming back up here, and we might get more bearish divergence in here with our price putting in higher highs, but our momentum remaining a little flat. Now, this is actually not terrible because if we look in the past, we can actually ride the upper boundaries for quite some time and still have the market pushing to the upside. This is one of my pet peeves when it comes to RSI, and not really RSI itself, but is the lingo that surrounds RSI. Whereas, like this area is known as the quote unquote overbought area, and I think that gets a lot of people thinking that, it's too expensive or that they need to sell when that's not necessarily the case. Just because it's in overbought doesn't mean you need to sell. It stays overbought over here for weeks and weeks and weeks before it finally does a little correction. But the important thing to me is the bearish divergence that has come into here. But as long as we're sitting above that 50, we're doing pretty good. Above 60, we're doing even better. But just because we're sitting up high, that just says that the momentum is strong. But once we start seeing a falling momentum with price continuing to the upside, well, then yeah, we can get the pullbacks. Now, the question is going to be moving forward was this pullback enough to suffice the bear div? In other words, is that it? Did that bear div, that bearish divergence, was that enough? Was that pullback enough to satisfy that bearish divergence, or is that just, or are we still waiting for that bigger, broader correction? We'll have to wait and see. But right now, we are above that 10-week SMA. Did get a close above it. Broke through retracement levels, heavy retracement levels, closed below the 786 though. So starts getting a push above that would signify that we are pretty strong on the SPY, and that the buyers are really bullish on really the U.S. economy. So we'll just have to, yeah. I mean, it's looking good. So I think we might see some continuation here this week. We might see some continuation of the SPX. Let's go drop down to the daily. We do have a gap here. We are sitting above that SMA. We did get closes above it. So would not be surprised to see a pullback before that continuation. We are it's hard to see because it is stocks. I'm sure if I went to something else like the futures, it would show up, but I kind of see a possibility of an inverse head and shoulders in here. And this is the daily chart. So this could take a few weeks going into September, which we do have the possibility of a Fed rate cut coming in September. So would not be surprised at all for some consolidation sideways, maybe even down, leading up to that FOMC. And this is really across the board. Bitcoin is to get that breakout of that downward trend, then that consolidation leading up to or some kind of consolidation leading up to that Fed FOMC, then would not be surprising. However, I mean, I mean, that's pretty far away. I don't know. I think it's September. What is it? September.
17th.
Uh, I want to say it's like the 17th as well. Whoops. Need to have it marked off on here. Vertical. 17th is a Tuesday, so maybe it's Wednesday the 18th.
Sounds about right. It's one of those 2 days.
So 6 weeks from the 31st of July. 6 weeks, 49 days? Nope. 42 days. The 11th? September 11th? Are they going to crash the economy on September 11th? Ooh, was that a bad joke? I don't know. Let's see. August, September 11th is CPI. September 18th is the FOMC. So it is the 18th. All right. So let's move this over. I mean, we still got plenty of time for Bitcoin to be making some moves here. Before that even comes up, we'll see. We'll see. I don't want to get ahead of myself because I've already gotten ahead of myself a few times and it's gotten me in trouble. So see that pullback going into the FOMC, the push up high, and then the push up to the 1.618. And then after that, we crash and we burn. That's what I think. Not really. But yeah, just waiting. I don't know, man. I don't know. The SPX is going to be, especially since I had this on the weekly. No, I had it on the daily where I was drawing that out. So if I would put the 18th on here of September 18th right there. All right. So yeah, we could see a little bit. It might push up and then do some correcting before and then continue higher. Now, if it did something like this, then obviously we might start looking at an ABC correction in there. To which case, that would mean that this would probably start to head to the downside. But 1 week, 1 day at a time. Meh. Rakino says meh. Meh. Port Corp, are you still with me?
Yep.
I mean, I know you are because I can hear your chair squeaking, but
Yeah. I think a lot of that is really going to depend on how big this rate cut is in September. Or if they just decide to kick the can down the road because we have mixed data points. I will really be paying attention to the labor force because that's going to be a big impactor on their decision making because we already know how inflation's going. And if they don't end up cutting here sooner than later, we're going to see recession really get out of control.
Mm-hmm.
And that's something that nobody wants to see. And they especially don't want to see that during an election year when they're trying to push candidates that haven't necessarily done too well with the economy. So if they can just keep it from blowing up, then they have a better chance. But nobody's going to vote for them if they blow up the economy before November. So
This is true.
if we get a 50, I'd be a little bit concerned. If we get a 25 basis point, that is typical, and I wouldn't be too worried. And it does give a lot of signal and for long-term potential kind of could ease us into not seeing the worst of the recession that we could possibly see. And that's what I like to see for my assets and also when I go to the store and buy things.
Yeah, prices are not going to come down though because they're inflating, literally. So just because inflation comes down, all that means is that the rate of inflation is slower than it was before. So the only way for prices to feel like they're coming down is for wages to increase, is for you to make more money because the prices of goods are still going up 2.9%. So if they're still going up at a 2.9% rate annually, and you are not increasing, and your wage is not increasing by 2.9% annually, then you are still paying higher prices. So even though prices are technically rising at a slower rate, if the wages aren't there to keep up with that 2.9% inflation, you are still going to be getting behind the price tag. So, what people are looking for is deflation, and I don't see that happening anytime soon. So, people will have to start getting more jobs or something. And but the thing is that I don't know if those jobs are going to be there because if can't buy stuff, then the production is going to slow down, which means companies will have to lay people off, and then we start getting into this whole recession talk. And then you start laying people off, people then really start having no money to buy stuff. Things really start to slow down on the production end and on the demand end, and everything really starts to feel the squeeze. And we are really heading in that direction. And but I don't know. We'll have to. I'm. I think. I don't know. I've got a feeling. I don't know why, but maybe it's because everywhere plastered all over social media and YouTube and the financial uh, gurus and TV personalities are all talking about recession. And I'm just over here like, what if we just go into some crazy, epic economic expansion? Uh, our supply chains and our production facilities are better than they have ever been. And yeah, I don't know. It just feels like that. It feels like we are just waiting for something to happen. It's kind of what it feels like, whether good or bad. It's like we're just waiting. It's a waiting game. Is it going to be good? Is it going to be bad? But what if the U.S. has positioned itself to get into a period of economic expansion?
Well, I
I
mean,
don't have.
that's what they've been trying to do. And they've
Mhm.
been trying to do it for quite a while. But the reason I don't really see that is the amount of small little bubble pops that we've seen go sector to sector to sector to sector, and it just all adds up. Where it's like, okay, well, first it was food, and then it was oil, and then it's gonna be housing, and
I actually like that though. I much prefer a rolling recession where it's just hitting each sector separately instead of everything all at once. I think that gives the economy more time to handle those situations and address them than if everything just crumbled all at once. Then I think that's a lot more difficult uh, to uh, to come out of and to fight against. Is but the rolling recessions, I don't know. That could just be the market cleansing itself at the same time. Like, as it's just cleansing itself of all the bad stuff that's in the market, the stuff that doesn't work, the non-efficient stuff. I don't know. I'm gonna be way more of an optimist than BC Poor Corp is over here. So I kind of like to look at not rosy glasses, but just like I think we could do something. I don't think it's gonna be. I don't think it's the end of the U.S. or anything like that. So that's just me. But you still have to be prepared for any situation, uh, uh, whether good or bad. You have to be just as prepared for the good as you do the bad. It is really loud in your background. All right.
My roommate may be a little drunk this weekend.
All right. Well, we're at the top. We're at an hour, so I think we can go ahead and end our test stream there. It was a good first stream, I think.
Yep. Give us a 1 in the chats if you think it went well. Give us a 2 and a little recommendation on what you'd like to see if you think there's something that needs to be worked on. Because we're here to serve you guys, not to make money or shill tokens or anything else like that. We just want to bring information and have fun doing it.
Absolutely, 100%. And if you want the degen trades, no, I'm kidding. I don't do degen trades. But if you want something a little more low time frame scalping, you can always join the Lunar Beaches Crypto Discord. That's all I gotta say. Don't forget to join the Piper Academy Discord, and don't forget to watch Piper Academy at 9:30 a.m. Eastern Standard Time, Monday through Fridays, and the Crypto Nightcap with TradeFly and FD White. I think that's a Monday through Friday thing.
Monday through Thursday.
Monday through Thursday. Thank you. And that one is 8:30 Eastern Standard Time, PM.
Yep.
So yeah, and Good Morning Crypto. I think we're gonna shoot for 5:30 to 6:30.
Yep, that was the plan.
5:30 to 6:30 a.m. Central Standard Time, 6:30 to 7:30 a.m. Eastern Standard Time, being the first market show that you come to in the morning. That is what we want to be for you guys. So thank you all for watching. I appreciate each and every single one of you. Love you all, Blackie Chan or BC4 Corp.
You guys have a great rest of the weekend, and we will see you bright and early Monday morning. Remember to ride those waves.
Thanks, fam. Mad love. Peace out.